Hi, everyone. Welcome to the midweek update for Via Business Network Global. It's Andrew O'Donnell with the Market Mindset. Today, big sell-off in global bonds. The bond market is getting beat up as Treasury yields go quite a bit higher. And there's also a lot less appetite for equities. The 30-year jumped by 14 basis points today, so it's now yielding about 4.92%. And this is important because JPMorgan Chase's CEO Jamie Dimon, he came out on Monday saying that he thinks that the Federal Reserve is not finished. They're going to keep pushing and pushing, and he's saying, let's get used to the idea of even a 7%. Now that's a huge number to get one's head wrapped around. Right now, we're currently around 5%, 5.25, 5.5%. So Jamie Dimon told Bloomberg TV that he thinks it's possible. He's not expecting it, but he thinks it's possible. But that's enough to throw the brakes for a lot of people. Now that would be the highest Fed fund rate since 1990. Now, contrary to that, BlackRock's Larry Fink sees about 5%. As well as kind of famous short seller and hedge fund manager Bill Ackman. He thinks the 30-year Treasury is likely to go higher, but he doesn't think the 10-year has to go much more above 5%. But that's still 5%. So looking back throughout market history, this is not a big number. You can expect 5, 6% to 7%. It's not unheard of. People will remember the 80s where they were exceptionally high. But for younger generations, this is a whole new world. We've been used to zero, free money, not for us, the retail people, but basically exceptionally low lending rates for companies to push growth, and for a lot of companies that meant also they could push their stock, they could do buybacks, and kind of invest in themselves. Now, this is changing the landscape. This is why it's going to be so important to pay attention to people with a lot of experience in the markets. I know a lot of young people, they don't want to listen to the old people because they're boring and we've got a new economy and it's all this. It never is. There's no such thing as ever brand new. We don't use traditional ways of valuing and fundamental analysis and whatnot. This is the time to look at some of these old fogies that have a ton of experience, that have been in very high rate markets, to go and look at what do we do? How do we get defensive? How do we make money in this market? Because you can make money in any market. So mirroring the sentiment, the Canadian futures index was higher. European shares traded higher, but Asian shares traded lower. Weak demand pressure from oil, despite both Saudi Arabia and Russia confirming voluntary production cuts. And we're seeing also a lot of major stock news too. So Intel Corp, the chip maker, said on Tuesday it plans to operate its programmable chip unit as a standalone business starting in January. Now, this was from a company they bought called Altera back in 2015 for $16.7 billion. So this might be an IPO that's coming up, one to keep in mind and to pay attention to. Meta Platforms as well, big giant laying off employees of its metaverse-orientated Reality Labs division. So that's something to keep in mind. Also, Twitch reportedly hit with another fresh round of employee cuts for that mainly gaming stream platform, but also, I mean, they do politics and health and stock as well. You'll remember back in March, Amazon cut its headcount by about 9,000, and back then as well, Twitch had done 400 cuts. So a lot of streamlining. They're citing economic uncertainty. So something to keep in mind. Another thing which we'll talk, a bit more detail about, reach out to me, is BlackRock and Exxon Mobil. So you'll know, if you watched me a lot, we talk a lot about BlackRock. They're a fundamental pusher of a lot of the green movement, a lot of the ESG movement. They have also backed off that quite a bit. They're coming up with a new term as well, so that's something interesting we can talk about later. But the U.S. oil producer chose BlackRock as a potential buyer for its majority stake in Italy's main liquefied natural gas import terminal. BlackRock has no intention of missing the opportunity in the traditional energy sector, as well as exploring the transition as well. On top of that, British Petroleum sale of 49% stake in its U.S. oil and gas pipeline network in the Gulf of Mexico, hoping to raise about $1 billion from that. We also see Ford and General Motors. They've put a comprehensive contract offer to resolve the 19-day strike from the United Auto Workers division. But this hasn't stopped the claim or dispute over the battery plant. So Ford has a $3 billion, I believe, battery plant in conjunction with CATL out of China. This is a huge win for junior Canadian stocks, lithium providers, phosphate, whatnot. They're putting that on hold to some degree. They're just throwing out a warning shot because the cost will be enormous. Also, there's a lot of backlash from the US in regards to choosing a Chinese battery maker. There are US ones they could choose. So we'll see what happens with that and as it develops. What's so important too in that is how this ties into some Canadian players. So, companies like First Phosphate, they signed a deal with Export Bank of the US for $175 million. That is a letter of intent that will hopefully become a full binding letter down the road here. But what's important about that is that high-grade phosphate is required to make phosphoric acid, which is the critical component of an LFP or lithium phosphate battery. And those batteries are used in both Volkswagen and Tesla. And we can see that in Ontario, there's plans to build a giant Volkswagen battery plant, as well as Stellantis in London, Ontario. And that's interesting because it ties us also into Lithium Argentina, who just signed a $90 million deal with Stellantis itself, the automotive manufacturing corporation. They're a conglomerate of both FIA and French PSA Group. So this is interesting because we've talked about this before. We see end users like car makers going straight to junior mining companies to look to solidify getting a supply of lithium. We're seeing more of that, and we're seeing Export Bank of the US showing a lot of interest in a very small phosphate company up in Quebec to provide them whatever they need to do in order to get them producing and to strengthen that relationship between the US and Canada. So that's how things are weaving together. Troubling, challenging market, but look behind the scenes. There's lots developing. We look forward to talking to you next week.